Well, he did it. Jay Powell just sent the market into hysteria yesterday. We have a lot of green all across the scoreboard. We're going to dive into that, what we heard Jay Powell say, what the expectations are moving forward. As we get going, please hit that like button, subscribe to our channel, share this out with as many people as you want. Nothing we say is financial advice. We're just a couple of guys who love talking about the markets. We are not financial advisors. Kevin, we got the 25 basis points we were expecting yesterday. Jerome Powell sounded a little more dovish than I thought he would. He sounded a little bit more upbeat, like they were, we finally turned the corner. I still think that we could be in for some pain ahead. I want to dive into that. What were your initial thoughts during the press conference, market action following the press conference and today as well?
So, yeah, it was, to be honest, it was pretty boring. It was literally everything that everyone was anticipating. Price didn't shoot up, too much in one way or the other. Like, not to a point where we're seeing, massive liquidations, good liquidations, but nothing that, excited me too much. But when I heard Powell speak, I think that's when it kind of threw me for a loop, hearing how dovish he was. And at that point, I was like, okay, this market's bullshit. You know it. I know it. This dude is just not learning from history. We're going back to the 1970s. It's gonna be a hot tub time machine with Jay Powell in there, and it's gonna be a terrible outlook. But no, I agree. It definitely was weird to hear him be dovish. It was almost like an early celebration, and that's the part that kills me, because when you kind of, what do you say? Disinflation is finally here. You don't know that inflation could spike at any point. So, he should have just gave his regular, every month, we're gonna see and wait for the data, and then we're gonna do our job. Fed has one job in the world, and that's just to raise rates and decrease them. And I don't know, this dude just seems like he was being a cheerleader for the market at this point.
Yeah, as of right now, the current probability for the March 22nd meeting is about 85.5% chance of a 25 basis point hike. A few things stood out to me. Number one, you and I had been saying for a while that we were expecting 3 more rate hikes this year in February, March, and May. And he kind of let it slip that the Fed is planning for, quote, a couple more. And I think that lends exactly into our hypothesis. So I'm still firmly of the belief that we're going to see 25 basis points in March. There's no April meeting, but I think we'll see another 25 in May. And I think at that point, we're going to see a pause because we have a meeting in June, July. I think they could pause for like 3 to 4 meetings in a row, and we might get a pivot late December. There's also still an opportunity where, like, if we see inflation go up, like, yes, it's come down, but it hasn't come down a substantial amount. We could absolutely see, inflation go up, and they need to throw a 50 or, God forbid, even a 75 in there. If that's the case, like, see you later. The markets are just going to go take a big old arrow straight down. Another thing that I found, particularly dovish from what he said was around the need to look at inflation and the job market, because it had been the belief of, you and I and much smarter people than us that the Fed wanted to see inflation go down and for that to happen, unemployment was going to need to go up. And they were looking at that marker as well. And Powell was asked yesterday, like, could you see a situation where inflation goes down, but the job market remains strong and you still continue to, pause or eventually pivot or change your policy? And like, he was very receptive to that idea and almost seemed like a little, I'm not gonna say giddy, but he seemed like pretty excited about that proposition, because he doesn't want people to lose their jobs, right? Like, right. The Fed, they have their mandate of bringing inflation down, not harming the economy. And I'm just wondering if, you got people like Elizabeth Warren, God, who are like chirping at him, like, you need to not raise rates anymore because you're going to hurt the economy. Okay, she is not an economist. She doesn't know what the hell she's talking about. Like, she's purely just trying to put out tweets that get people excited and get her support. So, I'm wondering if he had a little bit of that in his ear as far as, politicians coming at him like, hey, you need to be a little bit more dovish here. I don't know. But, I still think we're going to see, probably another 2 rate hikes in the coming months.
Yeah, I was really upset about his outlook on the jobs market, just from, an economics standpoint, I don't see a world where inflation comes down without unemployment going up. I don't see inflation coming down while unemployment goes down. That makes no sense to me in any capacity. You need to slow production, manufacturing. You need to slow, how fast people are spending money, how much people are earning. Like he was talking about how wages are coming down, but in the private sector, they're not coming down fast enough. So that to me seems like potentially this could end up just blowing up in our faces. This could have been a pointless meeting entirely, where 25 basis points isn't going to do enough, between now and, I don't know, say after Q1, middle of Q2. I mean, this thing could just absolutely spike up, ramp up between now and then. And it's like, okay, well, what do? We just wasted 3 months that potentially could have been, managed. It would be harder on people, a year or so from now, but at least it would have been a faster track than potentially what could happen if we do see a spike. So his reasoning for that to me seemed really optimistic, and it wasn't realistic. And that's why I was not upset, but I was just, and like I said, the market is BS right now. And I think a lot of this is just everyone is looking for a reason to rally. And Powell, to me, just seems like he's rallying with the market itself, or the sentiment that, we're doing a great job and we're succeeding in this fight against inflation. You don't know that. I mean, this thing takes time.
As you bring that up, like, I'm almost wondering, we had discussed 325 basis point hikes in the first 3 meetings. And with the fact that it's February, March, and then May, I'm almost wondering if the better strategy would have been pull the bandage off of the 50 basis point one here, 25 in March, and then you would have had multiple months of data again before you have to make a May decision. Like,
Yep.
And then maybe you pause in May, like if things continue to go well. Like, I almost feel with the way that the meetings were planned out and scheduled, did they screw up by not maybe like going a little heavier on the interest rate hikes earlier in the year, especially due to the fact that, like, yeah, inflation's gone down a little bit, but like nothing like they wanted to. It's still 5%, and the mission is not over because they're trying to get down to 2. So it's like, should they have maybe gone a little bit heavier to start the year and been able to slow things down sooner? But you know what? I guess we'll find out more soon. We got unemployment rate coming out tomorrow morning. That's going to give our next data point, and it's going to move the market accordingly. It would be nice if we could get back to the point where we're not just waiting on Fed meetings to determine how the markets are going to move, but actual what these stocks are doing. We've seen it's been an interesting couple of days because in addition to that, we've also had earnings come out. If we look at Meta, it closed the day at 188.77, which is up from $100 when Jim Cramer lost his shit on national TV crying about it. So if you would have bought Meta, the new rule, if Jim Cramer weeps on TV, that is the buy signal, because Meta was at $100.01. It's up 88% in 3 months since Jim Cramer cried on TV. Like 88% in 3 months, Kevin. What the fuck is that? Like, it's just insane. If you look at Coinbase was up 24% today. They're up $15.76 a share, 24% today. That's absolutely crazy. Tesla had a good day. They're at 188.27 now after, they were, God, where were they like 3 months ago? Down in the toilet. Like, they got down under $100. I'm sorry. January 6th, they were at 101. Tesla's up 88% in a month. Like, that is, that's crazy.
It's a mixture of two things for me. It's obviously a massive short squeeze because everyone, including myself, like, I'm so bearish. I still see the macro. I still see Tesla going down like to $64. So I'm still not necessarily on this board of everything's going to the moon right now. But there's a lot of liquidity to the upside, so they caught all these people. That's why you're seeing pumps going. And obviously, when you see a lot of liquidity, price shoots up, people start to put in, and then they become exit liquidity. So it's just a matter of time, I think, for a lot of these. But like 88% in, what was it, a month you said? Absolutely insane.
For Tesla, yeah.
And then did you happen to see that video I tweeted out about Jim Chanos? He's like an American investment manager.
I did not. Did you happen to see that Michael Burry deleted his Twitter account after he tweeted sell and then the market ripped the next day?
He's also one that's extremely early all the time. And do you remember, you saw The Big Short, right? the movie?
Yeah.
Yeah, remember how they were like all emailing, all pissed off because they're like, "What the hell are you doing with our money?" And then they wanted him to close all his positions at a massive loss, but then the dude was right. So early, but not wrong. So that's my opinion on Burry. But
Maybe we'll see it again.
Oh, I hope so. He's deleted his Twitter so many times. His name's Cassandra on Twitter too. So I love that. That's hilarious. But yeah, the channel's video is really interesting. You know, this guy's a short seller. He's huge in the market. But you know, he's talking about how they're net long, net short in a lot of positions. But for the most part, they're 60 to 80% right now short on the market. And this dude's made a ton of money. But he made a really good point about how everything is going up over the past month. And he's like, yeah, so is Bed Bath & Beyond. Like, there's tons of these companies that are pieces of crap. Like, they're not going to do well.
Yeah.
But you're seeing the price go up. Does that necessarily tell you we're in a bull market? No. A lot of these companies are still struggling with liquidity. They're going to have to lay people off. So right now, it's just the markets are doing what the markets are doing. They're finding a reason to rally. They're liquidating a lot of people who are going short too late. You know, short too all the way down at the bottom for where we were, and we were oversold. And now we're just going back. We're chasing liquidity. We're probably going to do it again to the downside. But absolute insanity how much we saw this, like, individual stocks shoot up, like Meta, Tesla. It's not something that I see that's sustainable.
Yeah, I think, you know, I'm only speaking for myself. I am taking some profit here. I'm selling some stuff that I held low earlier, last year, because I believe that there was going to be a good rally. I think this has been a great rally, and I have no problem taking a little bit of money off the table, not closing out my positions entirely. Like, I sold some Ethereum, in the mid 1600s. That's fine with me. Like, I don't really see it going to 2000 anytime soon. Like, I think I'll be able to buy back in at a lower price. Some stocks. Apple has been, doing well lately. I'm a big NVIDIA guy. That's had a great run. It's back to like 217 now, after a low. Over the last year, it got down to like 110. Like, that's up almost 100% from the low. So, like, I got no problem taking some profit from that. There's nothing wrong with selling during these euphoric times. It's probably the best strategy out there.
Oh, yeah, absolutely. I mean, when you're in the market, you always got to take advantage of every opportunity. So definitely, if you're positioned in a place where you can take profit or you're up a lot, I mean, there's no shame in doing that whatsoever.
Yeah. And, I have plenty of exposure to ETH through some of my higher quality NFT holdings as well. Like, I got my CryptoPunk. That's plenty of ETH exposure right there that I believe is going to be valuable long term. So we can move on. I don't want to bore anyone with the NFT talk, but we can let's move on. Anything else you want to talk about macro wise before we get into the charts? Because it's been, you said it was boring yesterday. I thought it was pretty interesting. It was fun. It's one of those days where it's nice if you can, like, enjoy it, but also be level headed enough to know that, like, okay, now we can do some selling.
Definitely. Yeah. Last thing I'll say on the market is, obviously, sometimes you just have to be patient with a lot of these things. Like, you could be absolutely right, but you'll be wrong like 300 times in between. So watching this, it's, you never want to turn back on your conviction unless you absolutely believe that you are 100% wrong. You never want to, turn on yourself if you're fearing, you are completely wrong and you don't want to miss out on gains. There's always going to be opportunities. There's always going to be pullbacks. Just to say, we haven't seen a pullback yet on this move. So I'm not saying one's coming. I'm not saying one will never come, but just always, things take time. And if you want to see, the fruits of your labor, you just got to be patient. So let's go into the DXY.
Let's do it.
And the DXY took a pretty nasty dump yesterday. And this is Bitcoin. Let's go to DXY. Yeah. So that's the weekly. So for the daily, this was a pretty nasty dump yesterday, and off of what necessarily was already expected in the market. Like, everyone said everything was priced in. Again, I've been saying that everyone else is priced into the market. But we saw this nasty just drop straight down. And then today we see a pretty good push to the upside. And again, this is like 1%. It's nothing crazy in the grand scheme of things. Obviously, the DXY is down a pretty good amount since like September, where we hit the peak. But we came back up 1.08%. But this necessarily isn't a bad sign. It's actually a pretty good sign because it's showing me that the support level is actually holding really well, this yellow area. Granted, I want to see it at this above this blue line here. I think that's the better level of support. But the fact that we wicked down here and then we came right back up, that tells me that there is still demand for the US dollar. It's still completely undervalued 100%. Like nothing has changed in that regard. But, shooting up against, tons of assets who were pumping like crazy yesterday, it's pretty strong to me. And everyone expects like that we're going to have a pivot now too. But the dollar somehow is still trading sideways within this range, holding support. Obviously, we're going to have to watch over the next few weeks. Things can change at any point. But for me, that's showing me that the dollar still remains strong despite where it currently is sitting. And it's completely undervalued if we look at the macro weekly. I mean, that's ridiculous how long this has been in the oversold for. So let's say Halloween all the way to Groundhog Day. So that's a pretty good amount of time. And then we see that we keep on making lower lows and lower highs. We're still trading this channel. Hopefully we're breaking out of it right here. But again, DXY is going to do what the DXY is going to do. Anything could change this if risk assets seem to be the more volatile investment. I definitely think that the DXY is going to move on the stock market more than it would on crypto or maybe inflation. I just think that these things are going to play out a lot longer than expected. Sold Pinterest yesterday. Pull back tomorrow, please. I'm not back in.
I need to look up Pinterest now on the charts because I don't have that in my list here. Let's see what has Pinterest done?
What?
Nice little.
That's a pretty good pump.
Pinterest had that is a pretty good pump. I'm curious if you. First off, thanks for coming to the show. If you want to drop in the comments, if you're willing, like when did you open that position? Because it looked like it was a good opportunity to sell. Like good on you for taking some profit when everyone got super excited. But yeah, I think I haven't really looked at Pinterest, but nice job there. It dipped as low as like 17. So okay, good work.
Definitely a good trade there. Let's see here.
Yeah.
I'll do one thing real quick. Parallel channel. Okay, so it's going up in like a bear flag necessarily. Potential. We're getting close up here to the top range. So actually, we broke out of that. Wow. There it is.
Now we got Kevin charting Pinterest live. I love it.
Yeah,
this is great.
I never would have thought I'd be charting Pinterest live on this show, but obviously I'm gonna have to start watching this. But broke above it. Obviously, you're above the 50-day moving average too, so that's necessarily a bullish signal. That's probably why the price pushed up so much. But yeah, very interesting. Good. I would have never thought to buy Pinterest in the first place. So taking advantage of that pump, nicely done.
Okay.
All right.
Yeah, good work. Let's go. Let's head over to the VIX now.
All right. VIX Vapor Rub. They had a huge pump yesterday. Just kidding. We're looking at the volatility index of the S&P 500. But right here, we can see that we are pretty low. We've been trading super, super low in the VIX. Hasn't seen any spikes up since September of 2022. And that's when we saw a massive dump on the FOMC ruling, I believe. That's when Bitcoin dropped from like 2021 down to like 18 even, because it was just nonstop red. It's like a massive candle. But point is, VIX has been undervalued for a pretty good amount of time. Everyone's talking about it, shorting into what I would consider support. We see this trend line coming here. Let me make this a little bit bigger. There we go. So we see this line coming right across here. It bounced right off of it. We got some momentum to the upside. We can see on the weekly. Let's go to the daily. Daily looks like it's coming down, but actually it came up a little bit here. So we could see this potentially just climbing the stairs to the upside. But the thing that really interested me was these moving averages. Let me see if it might have been on the weekly. Yeah, it's on the weekly. So you see the 200 and the 50. I wouldn't be surprised if we go a little bit further just to bring this death cross in right here under the 200. However, if we start to see S&P start to dump from that, I wouldn't be surprised if we get a golden cross where we come back, cross that, and we end up going for a huge spike. We can see one right here. So we came under, right? Came under right here, moving average. went under the 200, 50 came right above it, and then we saw massive spikes here, here.
That was a huge candle, Jesus.
Exactly, and then I mean it's pretty much just tracks the volatility of this S&P 500. So necessarily it's not going to be long lasting. That's why we're seeing these massive wicks to the upside. Eventually everything gets corrected, but we have been consolidating below the 200 EMA and below the 50 on the weekly. We're pretty low on the stochastic RSI. Wouldn't be surprised if we shoot up, test maybe the top of this wedge here, like maybe, let me pull this up. We got to change these colors, making them a little bit easier for everyone to see. But right around here, I wouldn't be surprised if we bounce off that. And that might be enough just to make, the markets a little bit fearful and bring back some of that greed, or bring that greed down so that we start seeing what the market probably should be reacting like in a bear market. But I think the VIX has a pretty good setup right now as long as we hold that support on the lower trend line. And S&P, I have a pretty strong conviction for the S&P, the Dow, and the NASDAQ. I'm still in the camp that we're going to see 20% drops for all three of those. From where we are, every single place where the S&P, the NASDAQ, and the Dow is, a 20% drop leads to a key level of support. And to me, that would be more of a bear market than what we're seeing currently. Like I can pull up the Dow. Let's pull up the Dow right now and eliminate this Elliott wave theory triangle pattern right there. Ruler, where's the top right here? Top to bottom right there, that's what, 22%. So, I mean, that's a pretty good move in a bear market. However, I think that if we grab this, we keep hitting resistance right here at this 34,376, 347, I mean, and 20% drop would be right here. And we can see that we bounced off of it or over here. We were below it. We broke through it as resistance to become support. Back test came up. Wouldn't be surprised if that's another one. We also hit it back here in February of 2018, 2019. There we go. Actually, my bad. 2019.
So
October.
If you go to just go to the all time on the VIX, and you can kind of see some of these spikes that we saw, and kind of some patterns begin to form. And it just seems very unlikely that we've seen the last. We haven't hit over 40 in the VIX since November of 2020, and it seems quite unlikely that we don't touch that again at some point. Yeah. If you look at some of these spikes that we saw in 2008, in October of 2008, we saw another spike, March of 2020, obviously. And, like has been said before, we've never exited a bear market without hitting a VIX of 40 or higher. Now, history doesn't always repeat itself. That's not like the end all be all. I get that. But just some of these patterns we've seen over the year of how these bear markets work, it seems highly unlikely that we don't see another run up in the VIX, which is going to coincide with, these risk on assets taking a big shit.
Yeah, I couldn't agree more. I think that a lot of people are counting the VIX out. They're saying it's a broken indicator or a broken, what do you call it? Broken trade pair. But for me, I look at this and I think it's just something that's super undervalued. And we've seen a bunch of things that are pretty much pointless. Like I said, Bed Bath & Beyond. I don't know. I haven't been there since the movie Click came out. But point is, that is not necessarily something that I see long-term being potential. It's going to trade technically. It's shot up. I would expect the VIX to do no different. And if the S&P takes a huge dump, which I expect it to, probably to 3,200, which would make sense to me, it's a strong level support, then I would expect the VIX to shoot straight up like one of those massive candles. So it's definitely something to keep an eye on. I think it's just a sleeper at the moment.
Yep. It doesn't really, no one indicator is the end all be all, right? Like they all have their place. They all have their use. And I think it's just one of the tools we have in our arsenal to evaluate what is going on here. And to me, it just shows that the market is overly optimistic, all things considered. So yeah, let's move away from that. I know you want to talk about the Dow for a second.
Oh yeah. So, I mean, I kind of talked about it right then and there. I think the Dow is not a piece of crap, but I definitely think that there's a good move to the downside in it. So yeah, well, is what it is. We got to pull out the ruler. One of my favorite things to do is to measure percentages. And we keep hitting this level right here, 34, what is that? 34,347. And we hit it yesterday, which is almost too perfect. hitting it yesterday on the FOMC date after being down about 400 points. Then it closed. This is the best part. Then the Dow closes like 6.8 points up after seeing that much volatility. So I don't know why the Dow is getting tanked while the NASDAQ and the S&P are shooting straight up. To me, it seems like the markets are broken. But for the most part, I still look at this as a technical trade, not trade necessarily, but technical analysis. And from that level to where this is, that's what, 16.67%. So between that range and right here, like I said, 22%, I think a 20% correction in the market is highly likely. Let me pull up the monthly. Yeah, I mean, this to me just screams BS. Like when I look at this, that's like no resistance, no support. That's going to come straight down, in my opinion. And if we look at the Dow and the history of the stock market, I mean, it kind of is up only. Do you know what I mean? Like, it's obviously growing. You know, it's over time. There's tons of money pulling in. People are constantly investing. But I still say we get a bad tank here because if we look at, what was it, 2008? I think that was the year where we saw the worst crash in the market for the Dow in terms of percentage. We come from the high to the low, and that's a 54%. So me asking for what, 22%? That's not too crazy. I don't think that's too much to ask. But in terms of support and resistance, this orange line for sure, I think we're going to retest. We already retested that back in September of 22. But again, if this is a bear market, that doesn't scream to me that that's going to be the bottom. I would anticipate it to be a little bit lower. And then the next level of support would have been that red line there, which is 26,591, which coincides with about 20% or so, which I think the Dow is probably going to hit. So definitely going to see a hit there if I'm right. If I'm wrong, obviously it's not going to do anything I just said, but I don't think I'm wrong here. It's just I might be a little bit early. That's about it.
Okay. Let's get into Bitcoin and then ETH. Bitcoin and ETH actually kind of dumping right now as we speak.
They're taking a big dump.
They're taking a huge, they're down like 5% in the last couple hours. So some big red candles right here, but let's get into those.
Kids, I'm telling you, patience. Patience always wins. In a world of rabbits, be a turtle. All right, let's look at this right here. So there's some volatility going back and forth. I'm seeing it shoot up 100 down, up and down. But I just want to look at the weekly right now because obviously we're seeing a red candle. In the show notes, I was talking about how anything, I didn't think we were going to close above the 200 EMA. Obviously, we're not right now. That could change at any moment. But, continuing to find resistance at this 200 EMA on the macro, weekly, monthly, that's not necessarily a great sign. Obviously, we're seeing some bearish divergence when we look at the volumes. They're decreasing. They're not increasing. And we have a high stochastic RSI, which tells me that the market thinks everything's pretty overbought. And we are. We had a nice rally. We had a huge rally. But when I look at this is insane. Like, I'm not even kidding. This is not sustainable to a point where you can find support. The same thing I said with the Dow, how it was up only. Well, if you don't slowly build and grind to a point where you can find support, when you come down, it's going to be the same slide that you wrote up. So looking at this, I think that the Bitcoin is obviously going to find some resistance here. I wouldn't be surprised if we did shoot up to this 25,280. Do I really expect it to go up there? No, because I'm a bear. But when I look at that level, that would be matching this high over here. So it would be a double top scenario. And if it fails to go above that, obviously that's bearish. Double tops are never great. Just shows you that you're finding extreme resistance at these levels, and the market is probably more bearish than people would like to admit. We're also finding this convergence right here of the 50, the 200, and the current price. Obviously, if the price dumps here, this 50 is going to just start curving, and this 200 is moving off the averages of all this information that we have right here in these candles. And look at this massive pump. So I could easily see the 200 going up, 50 coming down. There's your death cross in Q1. It's still a high probability. And again, I think I brought this up last episode when we were talking about historical data. It took 30 days for that pump in June, July of 2018 for Bitcoin to go up about 47%, this one right here. And within 20 days, we came right back, it was about 30% drop from there. And it was about 90 days sideways until we found the 50%, the 51% drop in the market, which truly brought in the bear market bottom. I'm not seeing tons of demands. Like even when I come over here and I look at the weekly volumes, let's see if I can pull this up a little bit better. Like I always say, this volume for FTX is insane for the sell for the amount of price action that we're seeing compared to what we saw over the past, 1, 2, 3, 4, even this week, so 5 weeks. I mean, that's, if we look at it right here, that's a huge chunk of that volume that's just not in any of this volume on the weekly. So not necessarily anything that I'm extremely bullish about. I see this, I don't know. I see tons of bearish divergences. I'm not going to turn on my convictions. I think we're just not seeing the accumulation for people who have tons of money right now. And that necessarily tells me that retail is buying in. We're seeing the DXY dump, so risk assets are going to pump. And we're just getting to a point where it's going to boil over. However, it might take a little bit of time. And that's why I continue to say, this could play out 20, 30 days like it did last time, and we see a huge 30% retracement. We haven't seen the retracement yet from this move. We will. It's just, I don't know. It's something to keep an eye on. It's nothing to get your hopes up about because we still have tons of bear market left. That's all I got, I think. I'm very passionate about this. You can see.
I can dig it. Anything on ETH you want to touch on, or is it pretty comparable?
ETH's going to zero. That's about all I can say. No, I'm just kidding.
Hey, man. Let's not get overboard here.
No, clearly I was wrong on this huge pump. So if I look at ETH real quick, so we're seeing a little bit of what I talked about last time. I said they were going to come up to, what was that, 1744, this 50-day moving average. Obviously, we shot up above it. I mean, above this level of support. We didn't catch up to here. We're about, 30 bucks away from hitting that level. But we're seeing this red candle. My main thing was that we were overbought. I think that a lot of people are getting bullish because we closed above the 200 EMA for Ethereum. However, it's an altcoin. This is extremely volatile. That's why it shoots up and down. Money pours in and pours out of this market. But we're seeing the same thing as Bitcoin. We're seeing volumes drop. Stochastic RSI is super high. We retested this 200 EMA. We bounced up, and now we're kind of in this red zone. This could be a slow bleed to the point where, okay, people realize this was a trap right here, and then we're just coming straight down to the point where we're going to have to find the next level of support. Where's that support at? Maybe around here, 1424, but we could come down a little bit lower to the main support level, which I've been talking about was major resistance for months, and that was 1338. For me, again, when I look at this, nothing's changed 100%. I still believe we're going to see $600, $700 ETH, but for right now, don't even yet. This is from last week, my bad. But right now, I think that we're seeing a lot of exhaustion in the markets and a lot of this euphoria. Unfortunately, people might not be taking profits when they possibly could, and they will probably regret it at some point when we see a huge, dump at, I don't know, maybe 2-3 months, maybe 6 months from now.
I don't know if I agree that we're going to see 600 or 700. I've spoken to some other people who I also have great respect for, just like yourself. I don't know, maybe we go back to 800, but I'm not, if we touch 1,000 again, that's probably where I jump back in because I don't know how confident I am in getting to 600, but that's just one guy's take. I don't have the technical know-how that you do. But we'll just have to see, man.
Yeah, definitely. Again, this is going to take time. I think a lot of people who are saying that the bottom was in here are celebrating way too early, including Jerome Powell. And it's just, okay, that's fine. You could be right for right now. You're going to be dead wrong in 6 months, possibly. You don't know. You have to be open to, being wrong, but at the same time, knowing that, okay, I might be wrong here, but I could be right in the long term. And what's your play? Yep. Is your vision to win in the long term, or is it your vision to win in the immediate now? For me, it's not to win now. I'm not going to risk all my, my powder just to make a few bucks here and there. I want to be right to the point where it's okay, now I have literally no work to do. The bull market will take care of itself. You know what I mean? This is the hard stuff right now, just sitting on the sidelines watching this. So pick your battles and, just make sure that you don't turn on your convictions because of what other people say. Again, do your own research. Don't always listen to me either. Obviously, everyone has a different goal in mind. Mine is long-term. So, yeah, that's all I can say on Ethereum and price.
Okay. That, I think, is going to wrap it up for today. Keeping an eye. We need to talk about Canto at some point because this thing is driving me crazy. I don't know if you've heard of Canto. It's a token that I heard about at 10 cents. It's now up to 55 cents over the last few weeks. I would like to kind of get into some of these other tokens as we maybe move. Lord knows how long this bear market is going to go. But
this thing,
yeah,
dude. I'm gonna say this. Honestly, just looking at this, f this. I'm just looking at these volumes. Look how the volumes dropping, but the price is going up. That is just asking for a massive red candle. That's like Squid Game, in my opinion. Again, this is just a guy who's looking at that right now. So you better just have your Twitch stream set up and just be watching these charts and just wait for that massive red candle. Again, I'm just joking.
Waiting for that. It went to zero moment.
No, it went to. I owe them money now. That's what it's gonna go to. You're gonna be in debt to Canto. But no, again, do your own research. I literally know nothing about it, but when I see price shooting up like that and I see volumes coming down, that's bearish divergence every time. I expect some massive sell-off or some sell-off at some point. I can't speak to the project of the fundamentals at all. I don't know anything about it.
Okay. I'll dive into those a little bit more and we can talk about it, but that's going to wrap it up for today. We'll be back on Monday. We're going to talk about, the reaction to the jobs report, everything that's going on next week in the markets. Should be a good Friday. Hopefully we have, maybe we have some good news. We get a little bit more green in the market, or if we get some bad news, it's going to be it could be a very bloody day tomorrow. If that unemployment number still comes in at 3.5, or God forbid it goes down, we could see a lot of red. We could see today's gains be, and yesterday's gains be wiped out in one move.
You can see 50% of the gains wiped out in one move. I'm kidding. I just want to have some fun. I literally feel nothing in this right now. I have no fear.
Kevin's just dead on the inside.
Yes, but always be kind. Always be a good person to everyone else. That's all I can say.
Okay. Good words to live by. That'll wrap it for today. Have a great weekend, everybody. We'll be back, like I said, on Monday. If you're still here, please like today's show, subscribe to our channel. If you enjoyed what we had to say, if you think we're idiots, whatever, drop a comment, share it with people you know. They can laugh at us if you think we're stupid. We just appreciate people watching. So for Kevin, for the team of FLOLiO, I'm Jeremy. Have an awesome day, everybody. We will see you on Monday.
Take care, everyone.